it is still happening too slow, and there's a lot more work to do for the Bank of England to make sure that it stays on that course going down.
So what does this do to people's spending power? What will this mean for our average viewer?
Yeah, but it's clear inflation in itself has been tough on the average consumer, because goods and services have increased in price more than your salary can keep up with. And when the Bank of England increases its interest rates, but regular family will have to spend a larger part of their disposable income on interest payments, and as such, they will have less money to spend on other things like clothes, furniture, new television sets, holiday travel, and
But
so
in a
on.
way, that's actually what the Bank of England wants, isn't it?
It is exactly, yes. One of the things they want to achieve here is that we spend less. They are trying to influence our spending behavior and our spending patterns, because the less we spend, they hope that will cause shops, manufacturers to lower their prices to lure consumers back into the shops again.
So it's bad news for borrowers, but it is good news for savers. Do we know if banks locally are passing on this higher interest rate to savers?
Well, I can see that at least when it comes to savings products, interest rates have come up. So if you are willing to tie up your money for a specific period, or at least set it aside, then interest rates have come up. I know there's been criticism in the UK of banks not increasing their rates here, and I'm not sure.
Exactly.
And I'm not sure how much it has until now affected normal checkings accounts, salary accounts. I mean, we do offer interest rates, and we have increased our interest rates on normal salary accounts to now 2.5%, and after today's decision, from September we will increase it even more. I don't know if that's what's going on in the other banks in Gibraltar also, I have to admit.
Now let's turn to the borrowers, so those who are really going to feel this, often younger people, perhaps looking to buy a house, that kind of thing. How many people are on fixed-term mortgages at Trusted Novus Bank at the moment?
In terms of numbers, I don't know, but I would say during this year where we've started offering fixed rate mortgages, and where interest rates have started to come up, so there's been a very, very big interest in this, and I'd say something like 8 out of 10 borrowers have chosen to go for a fixed rate loan.
So what will happen to those people that, once they do come off this fixed term mortgage rate, the interest rate's going to be much higher than they're used to?
It depends. If you're talking about those who are taking up a loan now, they have 3-5 years down the line.
Those who might come off it now.
But those who might come off it now, they will be facing a larger bill every single month for their mortgage, and I think it's prudent for anybody in that situation, if you know your fixed rate period is coming to an end this autumn, but take a conversation with your bank already now. Ask them to help you calculate the consequences of that, and if you can see that it's getting difficult to make ends meet, then further action may need to be taken.
At the conference today, the Bank of England said the rate was set to stay higher for longer. So does this mean we've seen the end of the low interest era?
It's difficult to say. Interest rates were very low, and if we look 50 years back, then the interest rate today is actually not very high. It is just high compared to the last 10-15 years. I don't think it's likely that within the foreseeable future that we will go back to virtually 0% interest rates. No,